Hello everyone and welcome to Coffee Time with Tatyana and Peggy. I'm Peggy Gross and I'm a law partner in the law firm of Frank & Gross in Beverly Hills, California.
Hello everyone, my name is Tatyana Skevin. I'm a founder of Skevin CPA in Torrance, California. Please grab your coffee and join us for today's talk.
I got my coffee for coffee time.
Great.
And it's good. Since I'm the attorney, I will do the legal disclaimer. Everything in our videos and on our YouTube channel is for general information only and more relevant to the state of California that we're in. We have a legal disclaimer. Today we are continuing our discussion of hidden assets and divorce and how tax returns can help you identify assets.
Thank you, Peggy. Today we'll be talking about tax return information it provides to us in context of hidden assets. So when we talk about hidden assets, usually we think of like someone's transferred the asset to a third party, or they deny of existence of the assets at all, or assets been sold or created a new debt. So whenever a situation like this happens, there would be a reflection on your tax return. And then when you put together tax returns and look at other records like property documents or bank statements, etc., you can find a discrepancy. In our case, the husband from our previous video who is self-employed and who has a small business, and his wife is W-2 earner. She's concerned about him being deceitful, right? Hiding stuff from her. So we're gonna assume that we got a hold of the tax returns. And today I wanted to kind of go over what we as a forensic accountant look for, how we analyze those tax returns.
Okay, then let's start with the tax returns. Are there some examples that you can take us through, Tatyana, on the tax returns of how we would look through there to find hidden assets and what we'd look for?
Of course. So I prepared like an example of a tax return.
So if you have your tax returns handy, or you don't, you want to put this on pause, get your tax returns, because this would be a good time that we're going through the taxes and you have a CPA right here that's going to show us what to look at to find hidden assets, because I know that's what we're all concerned about when we're going through a divorce, that everything's split fairly and adequately and nothing's hidden.
Of course.
I got mine handy.
Yes, let's start. So here's an example of a couple. They have two kids. They both work, and one of them work for W-2 wages. So page.
Well, let's just in case people, and I know it's common for you as a CPA or me as an attorney, when you say W-2 wages, what that means is people out there that have regular jobs, 9 to 5, you get paid either bi-weekly or every week or whatever it is, and you get a W-2 from your employer and you get a paycheck. So when Tatyana talks about W-2 earners, she means people that get paychecks, not people that have their own hair salon or this or that.
Yeah, you an employee. When you receive W-2 wages, it means you are an employee.
And that you're getting a paycheck from your
employer. That's correct. So thank you for straightening that out. So let's see, the first page of your tax return, Form 1040, Federal U.S. Individual Income Tax Return, will list by category different sources of income. And it will tell you where your income is coming from. So let's see, on this one, we have wages, we have interest, dividends, and we have some capital losses and other income. This other line is coming from other schedules that are attached in here, and that's actually what I wanted to go over more in details, because that's actually what's helping us to identify those assets that you may not know about.
Great. Can you show us what you are looking for on these tax returns that I'm looking at as well, and where we should look on our tax returns? And this is what we're looking at. And can you take us through that and see what we're looking
for? So like I said, each line, it actually has like a supporting schedule which provides more details. So let's go to the first one.
Okay.
So,
and what page is this schedule on? Just the very next page?
Yes, if you look at the next page, it's a Schedule A. So that's a very common schedule, and it's itemized deduction. And usually we go to the schedule to see if you have a house. If your family has a house, your primary residence, you will see interest, mortgage interest here, and property taxes. And that's just, that's a really good information. And if you know you have a house, you should see,
Schedule A.
Yes, you should see Schedule A, and you see if it corresponds to what's your knowledge. Let's say the annual tax for your property is $8,000, and that sounds about right, so we're good. So there's no other hidden properties. Okay, so the next schedule, Schedule B, they actually go in alphabetical order, as schedules that gives you details about where your interest and dividend income is coming from. So what it means, if you have interest dividend income, it means you have some money that are sitting in a saving accounts or
maybe stocks,
investments. Yeah, so and usually when you report your interest or dividend income, there would be the institutions where they're from, because you receive a form 1099 interest and 1099 dividends, and you will see that, let's say, Bank of America, Merrill Lynch, and you know that you have accounts there. So that's another great way to know where you have your savings.
So that's on Schedule B of the tax return. So if you're looking through tax returns that your husband has or something like that, and you see interest or dividends, you know they have account and there's money there, because there wouldn't be interest and dividends. So that's a clue that there's an asset.
Yes, absolutely. So the next schedule is Schedule C.
Okay.
It's called Profit and Loss from Business. And that's where small businesses, who don't incorporate their businesses and don't go into partnerships, usually they call self-employed, right? Mm-hmm. So that's where,
like a hairdresser, or didn't we talk last time? It was a restaurant owner.
Yeah, a lot of who don't want to go into like incorporating and go through that legal stuff. A lot of people still keep things simple. You can still hire employees and all that, but they just decide to be low-key. I don't know, just everything goes on this schedule, Schedule C.
They're just working, doing business, and not making the entity the issue. They're making their business and them and their salon or whatever the important.
Yeah, I guess it's just the simplest way to do business, right?
Yes.
So, and it's a great schedule because it tells you what the business activity is, right? And what the gross receipts are, what the expenses are. And in the most cases in California, if it's a community property business, then you as a spouse entitled to 50% of the business. So depending what business it is, if it has any value, so this is really important schedule to look at.
Can I jump in right there?
Of course.
As the attorney, I want to say it's a general rule in the state of California.
Of course, there's always exceptions.
That it's 50% and this and that. There's always exceptions. There's always other rules that are applicable, but it's more of a rebuttable presumption, as us attorneys call it.
Great. So we're moving on, and the next schedule is Schedule D. It's called Capital Gains and Losses. So that's another schedule that kind of tells you if any assets that you had been sold. Like we were saying, someone may claim that asset was sold, right, or lost, or I don't know, disposed of, you know, it
or
will,
not available at the time of divorce.
so if that actually happened, it should have been reported on that schedule. You know, it can be either for investments. Let's say you're trading stocks, it would be reflected here. Or let's say you had a asset like a vehicle, and then you decided to sell it, or you had a property that, you know, eventually, you know, it was time to sell, so it would be reflected here.
And we can go back tax returns several years when you're filing for a divorce and see if maybe a year prior something was moved. So that's a good way of forensic, like a detective.
That's what we do, yeah. When we
Yes.
usually analyze things, we don't look only at 1 year, we look at the period.
Absolutely, because a
period
lot of
of
people
years.
are worried that, well, a year prior, my husband moved it to
Right.
X, Y, and Z, or this or that,
Exactly.
and he's claiming a divorce. He doesn't have it anymore. But like I said in the last video, that forensic accountants are detectives that are really good at math, and they can see where things in years past off the tax returns used to be there giving dividends, all of a sudden aren't, and then we can go into court and ask why.
Yes, exactly. And our next schedule, we're almost there.
What schedule are we on now, Tatyana?
Now we're on Schedule E.
E, okay.
And Schedule E actually has two parts. First part, which I call page 1, is
and I bet the second part you call page 2.
How did you know that?
Smart cookie.
Yes. This is part 1, page 1. It reports income from rental real properties. Let's say you have a lot of people like to invest in real estate, right? And usually it's a passive activity, but it's really good because you know, you can deduct depreciation, you can get all kind of tax advantages, but at the same time you increasing equity in the real estate. So if you own a real estate and you rent it out, this is where it will show up. It will tell you what kind of property it is, how many days it was rented, what the revenues were, and what the related expenses were. So that's a great schedule to see if you own any real estate. It should be there.
What about depreciation?
Depreciation, so this is a interesting concept, I guess. It's an accounting concept. It's when you purchase a property, right? Let's say you bought a real property for $600,000, and this is an asset, right? This is an asset to you, and you.
And just so people know, because for us these terms we use every day, an asset is something you have.
Right.
So if anyone was unsure of assets is something you have. That's your asset. Even a chair or a car, these are all assets you have. So that's what we're referring to when we say assets, things you have.
Yeah, in this particular case, we're talking about a real property. So you acquire real property, and you know, it can serve you for many years, right? It's not like you used it and you're gonna use this whole thing up. So you're gonna have benefit of this property for at least like 30 years, right? And that's where depreciation comes in, because as a business asset, you cannot just write off all the 600,000 that you purchased it for, because you have so many years of life that the asset can serve you. So accountants came up with this thing called depreciation. So you can deduct the value of that property, let's say over 30 years, and take a deduction for it. And that's why I said it's really good, because it's a non-cash deduction. In this particular case, it would be non-cash, but it decreases your taxable income, and at the same time you still have this equity increasing year to year.
Now, for you following along with us, and you got your tax returns out to follow along, this is a depreciation schedule. Can you tell them where to turn in their tax returns Tatyana to find the depreciation schedules?
Oh, Peggy, you're ahead of me. Okay, great. But this is, I guess, it's a good time to show actually what depreciation schedule is.
And let them know where on the tax return, or is it just titled depreciation schedule?
Yeah, it's called depreciation schedule. It's not, it's like a supporting schedule to your tax returns. Sometimes I notice when you get a copy from your accountant, it's not included. But if you have any business assets, it should be included, and you always can ask for it because, I don't know, it's some setting in the program. Sometimes it doesn't print, or for some reason someone doesn't want to give it to you. But that schedule is great. I love it because it tells you the story about all the assets that you know, business assets. Sometimes it's, if it's a personal asset partially utilized for business, you'll see it here, and it gives you the date it was purchased, how much it was paid for, and what the depreciation that we're using on this tax returns to take deductions for taxes. For example, if it's an automobile, usually it's like 5 years. If it's a building like residential, it's usually 27.5 years. So you can find it all on that schedule, and that's why when we look for assets, this schedule is very, very useful.
That's great information, Tatyana, for clients that have all these documents available.
Yes. So I just didn't want to forget one last question that I wanted to cover today.
Okay.
It's that part 2 of Schedule E. And
oh yes, page 2. We did page 1.
Yes.
I tend to skip ahead. Thank you for pulling me back. We're on page 2 now.
Right.
What we call second part.
Right. So this is also extremely important page, because that will tell you if your spouse have any interest in any businesses, like it's S corporation or partnership, so-called pass-through entities.
For people that aren't familiar with the corporate breakdowns and corporate structures, could you explain what an S corporation is?
S corporation, it's so-called small corporation.
Okay.
Because for tax code there is a corporation, and that actually is, for tax purposes, is a separate entity. You would not see any income from C corporation on this schedule.
You said C corporation.
C corporation, right? So
okay,
because
so C and S.
I'm trying to answer your question here.
Okay.
Yeah.
Because there's just technical words that we use that I think may not be.
That's why I mentioned pass-through entities. Is because like C corporation is not a pass-through entity. That's why you would not see it on this schedule.
Right.
But S corporation, what it means is that S corporation does not pay taxes, federal taxes, on its own level.
So the IRS.
It passes through income to the shareholders through Schedule K1, and that income is included in total income of that individual, and based on that, the total tax for the year is calculated. So pass-through entities, meaning there is a separate tax return for that business, either partnership or S corporation, and as a shareholder or partner, you will receive Schedule K1 that will report net of that business's activities to you. So, and that will be reported here, and that's important to know. So if you see anything, any entities on this schedule, it means you need to go look for that other tax return for that S corporation or partnership.
So it will. So the entity or the business will have its own tax return.
Yes.
So you have to make sure when you're looking at tax returns, there's your personal tax returns, a business tax returns, and all these documents are like breadcrumbs to find assets that you may want to bring into the divorce, that you may have a right to have some part of, especially here in California.
Exactly. Yes, you said it perfectly.
Okay, so like I was saying, this is all really great for people that have all these documents available, and I think people should really save documents, even if you don't foresee anything down the future, a divorce, a car accident. You foresee clear sailings for your life. I would still recommend that people have a filing cabinet, a little filing cabinet in their house, in their garage, and just put each year's tax returns, personal, business, corporations, and if you ever need them, everything's organized, you know where they are year after year. And if nothing happens to you in your entire life, once you die, your kids could burn them if they want.
And to reiterate the importance of all that we discussed today, how important taxes are and tax keeping records, you know, there's a famous quote: there is nothing certain in this life except for taxes and death, right? So that's why I encourage everyone. Let's say you're not in charge of finance. Let's say your husband, or one party in the family usually takes care of everything, right? But don't be shy to ask. Every year we file these tax returns, and by law both spouses require to sign this tax return. So this is a time to ask questions. This is a time to review returns, ask questions if you don't understand something, and this actually healthy for your relationships, and it will also help you a lot if you're going through something like a divorce.
And also it brings down the anxiety level when there's a divorce or anything like that. If you know where all your records are, there's an extra level of anxiety on top of an already stressful situation. If you have to call the accountant and hope you can get them and have them send you their records where they may have it or may not, you don't know where the records are. You're going through the garage, boxes after boxes, and dust everywhere. It's just a way, when something's already stressful, to not add on another level. And it's so simple to just keep a little filing cabinet in your garage and put these things in. But there's one thing I wanted to add, and that's when it comes to litigation. When it comes to litigation, the more records you have and can produce, the better the chances are for a successful outcome. If there's some you don't have or you can't get, an attorney could always use a subpoena to subpoena records. Sometimes it works, sometimes it doesn't. Subpoenas are always available to get records, but like I said before, that can be costly and time consuming, and if you have them available, it's just one less stress, one less expense, and sometimes you can, with a subpoena, get documents. Sometimes you can't. You just don't know. Maybe where we're getting it from had a fire or who knows what.
Right.
Subpoenas are always available though. But like I said, if you can have those documents handy, it's just one less expense and it really raises the outcome of a litigation to be more and more successful. The more documents you can have to kind of overwhelm the judge of this really existed. Because sometimes if you only have one, it's one. But if you have 10, 15, documents on all different things saying that there was a business, it's kind of hard to dispute that on the other side.
Right. Yeah, so we hope this information was useful to you. Please share with your friends or whoever you think may benefit. And we hope for your comments, feedback, and likes.
And if anyone, like I always say, wants to talk privately to me or Tatyana, our phone numbers and our email addresses are linked below in the video. And feel free to give us a call, send us an email. And until next time, we will see you in our next video. So stay well.
And stay safe.
Bye-bye.
Bye.